Good afternoon, everyone, and thank you for joining our webinar today, Paying the Tuition Bill. My name is Migdalia Gomez. I'm the AVP of Community Engagement here at the Harvard University Employees Credit Union, and I'll be walking us through today's presentation. Please know that closed captioning has been enabled, so for those that would like to utilize that, you're more than welcome to be able to see it at the bottom of the screen. If you don't see it, then you just have to activate it or list it, but it should be available to you. A little bit about today's presentation, but actually before I jump into that, we are in webinar mode. So that means that you won't be on camera. You'll definitely be able to use the Q&A to submit any questions. But before I get into that, I'll talk a little bit about us at the credit union before we get into our topic of paying the tuition bill. And we are Harvard's not-for-profit financial institution. So we do the same thing as a bank in the sense that we have different products. As a bank, we have your mortgages, your car loans, your credit cards, your checking accounts, your savings account, you name it, we have them. But the biggest difference is that as a not-for-profit, we're able to give back our profit to our members, including anyone that's a part of the Harvard University community. So that includes Boston Children's Hospital and all other Harvard affiliated teaching hospitals. If you want to learn more about us, I'll put more information in the chat, but you can go to hbcu.org. We do have a branch that it says new, but I think we're at that point that we should change it to newish branch. We opened a branch back in, I think at this point it was October or early November. So wild to think that it's been almost a year, but we opened a branch right on 435 Brookline Ave and right between sort of where Sweet Greens and the corner of Jocelyn's place. You'll be able to find us. We're open Monday through Friday from 9 to 4 at that location. But you could also bank with us online or visit one of our other branches, including the one in Harvard Square. So that's sort of enough about us at the credit union. I am going to go off camera, but I'll be here answering any questions. Just easier for me to manage the chat without having to also look at the screen. But as I said, we are going to use the Q&A today. So if there are any questions or anything that I can clarify, please use the Q&A. You have a couple of options with the Q&A. You can also submit questions anonymously if that is your preference. So know that that is also an option. With today's presentation, I'll give you a little bit of background as to who I am and where I've worked before and sort of my connection to paying the tuition bill. Well, first I'll start off with that. I worked at Emmanuel College as a director of student financial services. So I oversaw our undergraduate and graduate programs and both the financial aid piece of it and then the student accounts receivable. And prior to that, I worked for the Massachusetts Educational Financing Authority, MIFA, and before joining here at the Harvard University Employees Credit Union. So I have a lot of experience. I used to proudly call myself a FAFSA geek and know all these terms. So if you have any questions, if I don't know the answer, I am sure that I can connect you with someone that does. So a little bit about the paying the tuition bill and what we're going to talk about today. So I'm going to go through a couple of different options. This presentation is primarily for paying the tuition bill as an undergrad. However, if you are attending and are interested in paying the tuition bill as a grad, please put that in the chat or put that in the Q&A so that I can make sure to address any specific concerns that you have. I also am assuming that most people here are parents that are paying the tuition bill for their children or a family member. If you are attending for yourself and paying your undergraduate tuition, please let me know, put it in the Q&A. That way I know to make sure to address all points. But the first question when thinking about paying that tuition bill is having the conversation of who is actually paying the tuition bill. So one of the things that I would see, honestly, a little too often, if you will, was that sometimes when people would come into my office and families would come in, they just toured the campus. They were excited. They want to know about cost. We start talking about paying the tuition bill. And that is usually, or at least I saw many times, that was the first time that those families were sometimes having that conversation. So sometimes the student thinks that the parent is paying, or if it's divorced parents, one parent thinks the other parent is paying, others think, no, we're splitting it 3 ways. So first step, before getting into the technical ways that you can pay the tuition bill, we'll talk about loans, we'll talk about payment plan, talk about all of those. But the first thing is to identify who is paying the tuition bill. Are you doing this as a family? Are you doing this for yourself? I know I see that some of you are going back to school. So even for those that are going back to school, if you are in a marriage or if you're in a partnership, are you paying for your education 100%? Are you getting any help from either a partner or are you getting any help from employer? We'll talk a little bit about that as well. So first of all, before getting into the sort of specifics of paying the tuition bill, one of the pieces that we want to talk about is understanding the true cost. Now, I know that $50,000, depending on the institution, may be too low for many, and I know it could be high for others, depending on, especially for those that said that you're going back to school. It may be if you're going back part-time, hopefully the costs aren't that high. However, I like to use this number because it's an easy number to round up and round down from. So with understanding how to pay the tuition bill and how to sort of strategize it to best meet your financial situation, one of the first steps is understanding what is the actual true cost of that tuition, of that institution. So what I mean by true cost, it's the billed cost. So this is usually the easiest one to think about because you're getting a direct tuition bill. Then you have the financial aid. And regardless of if you are a graduate student, an independent student, the parent of an undergraduate student, this is going to be similar. You're going to most likely apply for financial aid. I highly encourage everyone to apply for financial aid. That financial aid will be deducted from your tuition bill. Now, the amounts may vary significantly based off of what program you're going into. For undergraduate programs, traditional 18 to 21-year-olds or 22-year-olds or so, they tend to receive the most in undergraduate institutional aid. Graduate students will receive some financial aid depending on the institution, but most financial institutions tend to not have as much funding for the graduate programs. So you may notice that as a graduate student, if you're going back to school or as an independent student going back for undergraduate, sometimes you may not have as many funds available to you but that's typically more towards the graduate program. Then you have federal student loans, which we'll talk about. All of these are deducted from the tuition bill. So the actual tuition bill or the actual cost that you would be responsible for that year would be, in this case, about $25,000. But when we're talking about paying the tuition bill, we want to go back to the true cost. We want to understand, how much is it actually going to cost us for all 4 years that the student is enrolled, or for those that are going to the graduate program, if you're going to be in it for 2-3 years, depending on your program, what is going to be the true cost? In this example, we multiplied it by 4 to get the estimated cost for the 4 years. So in this situation, it's about $100,000. And that's an alarming number. And I know, paying for higher education is unfortunately expensive in our country. And, see it all over the news. We're trying to get student loans forgiven and different repayment options that have been submitted to Congress, hopefully for approval. So there is a lot of talk about hopefully in the future changing some of these, but unfortunately the reality is that for right now it is high. And that's why, and I think it's great that you're all here to start thinking and strategizing, okay, how do we actually tackle these costs? So a couple of different pieces when you're thinking about the college tuition and how you're going to pay for it. You're typically going to be billed in per semester, 2 different bills. So that full amount that you owe, you're going to pay about half of it now, so around July and August. And then the spring semester is usually due around the holidays, so November, early December. This is, again, also going to be important as we get into the different ways that you can pay, because you're going to think about how you can strategize based off of maybe even this time of year. Okay, and I see that we have submitted a couple of questions have come in, some about tuition reimbursement benefit at Boston Children's. So we will actually address those in a couple of minutes. I have a slide that will talk a little bit about that. And we do have Wendy from the benefits office that will jump in and answer some of those questions. So if anyone has specific questions for what programs are available at Boston Children's, know that Wendy is on the webinar and she'll be able to address those shortly. So please continue to submit them. So before we get into the paying the tuition bill, one of the things that I always encourage people to think about is how can you reduce the cost? How can we make it so that we don't have to pay that high of a bill? And these are some of the different options. Now, room and board, typically for the traditional undergraduate, so for grad students going back to school, these won't necessarily apply to you. The health insurance piece, that does apply to all students. In the state of Mass, students are required to have health insurance. So just make sure that whether it's you as the parent of an undergraduate or you as a student going back to school for yourself, that you make sure you complete the health insurance waiver, because the health insurance charge, if you already have health insurance, which I'm assuming most of us here do, you don't want to have to pay for it twice. There are times, not often, but there have been times that the school's health insurance may be less expensive than the insurance sometimes provided or that an individual may have on their own or through their employer. So it is worth looking and comparing costs, because that is one way to reduce costs overall. Some institutions will offer sibling discounts. Now, this is important even for those that are going back into graduate programs. Like, just find out, sometimes some schools may offer that. It's not as frequent with the graduate programs, but I have seen some discounts. So it is worth asking, are there any discounts if anyone else in the family? So it doesn't sometimes have to even be the sibling, but just someone else in the family. If they are attending college or university, the financial aid officers, the billing office may be able to offer a discount. Now, another piece to try to reduce costs is academic planning. And specifically what I mean by this is summer courses, not so much in the graduate programs, but summer courses for undergraduates, if you take them, even if it's at the same institution, they tend to be sometimes less expensive than if you take them during the fall or spring semester. Part of the reason is that you're taking a more accelerated course. So even though you may be learning the same amount of information, you're not meeting as often. It just tends to be less expensive because it's usually a quarter or half the time than the regular course. Also, graduating early. And this is something that it's a good option typically for undergraduate programs, because you need a certain number of credits to graduate. But each semester, for you to be considered a full-time, you can usually take a range of classes or credits. As long as it's within that range, you're still considered full-time. So for example, if you take and this is just an example, but if you take anywhere between 12 and let's say 20 credits, you may still be considered full-time. So that could be 3 classes or 5. If that were to be the case, then sometimes taking additional coursework can help you graduate a semester early, which can save you an entire semester's worth of cost. And that, again, is typically for the undergraduate programs. The graduate programs tend to charge per course. So it's a little bit different structure, but do check with the program for those that are going back to school for yourself. Check if that is an option. It does mean, of course, more work during that semester. So it may not be a good option for everyone, but there may be times of years that at different times of year that may be a benefit. And then there's also transferring credits. And depending on the program, especially for undergraduate programs, students can take a class and usually your prereqs. So maybe like an intro to English or math course or bio. You can usually take those at a community college for significantly less cost and then transfer them into the program that you're going to receive your degree from. The benefit of that is that you're able to significantly cut down on expenses. And if you combine that with taking advantage of what the full course load would be, it could end up sometimes saving you an entire semester worth of cost. And then there are student scholarships, and these are usually resident advisor or RA scholarships. There's usually scholarships for returning students. So as undergraduates, always check with the financial aid office to see, are there scholarships for returning students? Sometimes they're referred to as endowed scholarships. For graduate students, find out if there are scholarships or fellowships for residents, if there are scholarships for graduate students that live on campus as resident advisors. So that would essentially be a full-time job, but the benefit would be that you could not have to pay housing cost. So that could be a way to save some money. We also have at the credit union a scholarship that is, and we actually should have updated the slide, apologies for that, but we actually award 15 $1,000 scholarships to high school seniors. And these are seniors that are entering their first year of college. The student does not have to be a member of the credit union. Anyone who is a member or their parent or legal guardian, they are able to submit the application, or I should say the student can submit it because the parent or their legal guardian is a member of the credit union. So you can learn more about that at hbcu.org/scholarship. And for those of you that are not members of the credit union, I encourage you to check with your financial institution to see, do they offer a scholarship to help students with expenses to college? Okay. So now that we have an understanding a little bit of how we can reduce that tuition bill, how do we actually pay that bill? What can we do? Well, there are really three sources of tuition payment. You have your past income, your present, and your future. So we'll get into all of these. For your past income, it's really looking at if you have any funds in perhaps a 529 plan or any other college savings plan or any funds in personal savings account. And this applies to undergraduate and graduate degrees. If you do have any of this past income, these are some of the conversations or some of the things to consider. Are you going to use the funds all 4 years, or are you going to use them maybe the first year or 2 years of the program? Or do you have other children? For parents of the undergraduate students, do you have any other children that will be depending on those funds? If you do have money in, let's say, a 529 or any other sort of college savings plan, one of the suggestions is to contact them honestly about now, or, and if your student if you're paying the tuition bill next year, to contact them around this early summer to find out what is the plan or how early in advance do you have to submit withdrawal forms. Because typically the way that those 529 plans work is they will send the funds directly to the school, but the account owner has to contact the plan to request that the funds are sent to the school. And that process typically takes, depending on the plan, it could take a couple of weeks. Sometimes it could be pretty quick. It really does depend on the plan and the time of year and the volume that they have. But that is something to think about, because if I'm going to use, let's say I have, and I'm always going to try to use easy numbers for math, but let's say I have $40,000 in a 529. If I wanted to take out $10,000 each year for that plan, then I need to contact them at the beginning of the year, or if I wanted to send per semester and request that those funds are sent. And that is going to be one source. But if my tuition bill is due August 15th and the university or the college doesn't receive that 529 until August 17th, I may sometimes get a late fee, or sometimes the student may be in jeopardy of losing their classes. So you want to make sure that you meet the deadline, and that payment deadline isn't when you contact the 529, but when the funds are received by the school. Of course, if the funds are running late, you could always call the school and let them know, and they'll make a note on the student's account. Another source of income is really our present income. And that is another way of sort of paying that tuition bill. Now, many colleges will offer and universities will offer a tuition payment plan. And that is one possibility. A tuition payment plan, let's say that we owe $10,000 for the year. That means that I could set up a payment plan for $1,000 per month that gets automatically withdrawn from my account and paid to that school. Now, because that is on an institutional approved or institutionally run payment plan, even if my payment due date is August 15th for the first semester, the $5,000, if I set up a payment plan for that $10,000 for the full year's balance, or even for the fall semester, I don't have to have each payment in by August 15th. The first payment would be let's say on the 15th, then the next payment would be due a month later and a month later, et cetera. So that's another option. I highly encourage this as an option, even if you're able to do $100, $200, whatever amount you're able to do. If you can, that can help reduce the amount that you're borrowing. And especially for those that are going to be, if it's an undergraduate program that will take a couple years, or even a graduate program that is more than a year, every little bit that you can pay now helps reduce how much you have to borrow and repay in interest. And then the big one is that future income. And this is the one that most of us have to use a lot more, because just the cost of higher ed being as high as it is. There are two different categories when it comes to student loans. You have your federal student loans, And I'll get into more of the specifics of both, but just as a high overview, you have the federal student loans and then you have private loans. Now, for the federal student loans, you have subsidized and unsubsidized loans. You have the plus. The benefit with the federal student loans, they have more forgiveness option. They have more repayment option. So all of the loans that you've been hearing in the news about potentially getting forgiven, those balances, the different options, those are all for the federal student loans. The private student loans, on the other hand, those loans don't offer as many options. The private student loans are typically with your banks and your credit unions. So a MIFA loan is a private student loan, a Sallie Mae, a Bank of America loan. Those are private student loans. Those are similar to credit cards in the sense that there are many different options, and the one you sign up for is sort of the one that you have. You can't switch from one loan to another with private student loan. You can't switch from one repayment to another versus the federal student loan program. They have more options available to you. This is a little bit of information, more information on the specifics of each plan. I know that I'm covering a good amount of information. If there's anything I can clarify, please use the Q&A to let me know if there's anything else further you want to go into. And then if you have any other questions for Wendy, who's joining us from the benefits office at Boston Children's, please let us know and she'll be able to answer those shortly. So about the federal direct and subsidized and unsubsidized loans, these, if you're a parent of undergraduate students, probably when you went to school, they were known as Stafford loan. These are loans that are only available to undergraduate students for the unsubsidized. The graduate students can borrow unsubsidized loans. As long as the student is enrolled at least half time, there's no repayment necessary. The student's not required to make payment. Although if a student is attending as an undergraduate and has unsubsidized loans, they could choose to pay the interest. The difference between the two is that unsubsidized, I always like to remember like I have to pay interest on it. So unsubsidized, you have to pay interest on it while the student's enrolled, it accumulates. So you have to pay that interest. It capitalizes at the end. Subsidized, the government is paying that interest on behalf of the student while they are enrolled at least half time. Here you can see the rates. The rates are definitely have increased for these loans, but it's across the board as we've seen, rates have been increasing. And with the subsidized and unsubsidized loan, they do have a loan fee. This is very common, unfortunately, with the federal loan program. So just know that even though you borrow a certain amount, let's say that $5,500, and I'll actually go into these here. For the first year undergraduate students, and I noticed some folks in the chat, the Q&A said that they were going to school as independent students. So as independent students, you have higher loan amounts that you can borrow. But regardless of that loan amount, which increases every year, you don't get that full amount deducted from your tuition bill because there is that loan fee. So for example, for the first year student, that $5,500, with the loan fee being about 1%, that means that about $50 or so will be taken off of this loan. So you don't pay you pay for the full loan, but that full loan, that fee goes back to the Department of Ed. And there are aggregate limits. So sometimes I would get the question, well, can I just borrow more in subsidized or unsubsidized loan? Fortunately, they are capped. So students cannot borrow more than the aggregate amount. For those of you that are going back to school for yourself, this is going to be important because there are aggregate limits. So if you borrowed previously in undergrad and now are going back for grad school and haven't paid back some or most of those loans, you may be close to your cap. So you just want to be aware of that. The financial aid office, they have a way so they'll know and they'll award you accordingly based off your limits that are available to you, but just something to be mindful of, that if you do have or have borrowed before for subsidized and unsubsidized loans, there is an aggregate amount. In addition to the unsubsidized and subsidized loans, you also have the Federal Plus and the Graduate Plus loan. So for the Parent Plus loan, these are loans that parents can borrow. They do need to complete the FAFSA, or the student needs to complete the FAFSA, but these are loans that the parent can borrow on behalf of the student. Now, when I say on behalf, you're borrowing it, you're paying for it, or you're borrowing it so that the student could go to school. But that is your loan as a parent. So this means that if a parent borrows a plus loan, that is on the parent's credit report. The parent is responsible for that repayment. The student, it will never show up on the student's credit report. Student will not be responsible for this. This is going to be important for the reason that sometimes parents may borrow a significant amount for the student, and that could impact the parent's ability to borrow in the future. So that's just something to be mindful of, that as a parent, if you borrow the plus loan, it is under your name, it will be on your credit report, and it could impact your ability to borrow in the future, either for another student, for yourself, or for a car, a home, whatever needs you may need or have. Someone asked, is the dependent student one that is not claimed as dependent on parents' tax form? Thank you for that question. So independent student is typically a student that is, I forget the exact age, I think it's over 25 or 26 years old. It's a student that is financially independent from the parent. So it doesn't matter if they are claimed separately, their tax filing purposes does not impact that. There are changes that are being made to the FAFSA that will be affecting this upcoming, not 24, 23, 24, but 24, 25 academic year, that will change the definition of independent student. But typically an independent student it's not based off of the parent's tax filing status, but more typically of the age of the student. An example, if a student is or has been award of the court, they are typically considered independent student if they've ever been in foster care. If a student has their own child that they provide support to, then they're considered an independent student. Thank you for that question, and please feel free to continue to submit more. So with the plus loan, the interest rate is a little bit higher. It's at 8%. The loan fee, though, however, that's what I really want to point out. That's significantly higher than the loan fees for the other loan program. It's higher than the subsidized and unsubsidized Stafford loan. So if you're looking at a $10,000 loan, that means that even though, yes, that loan is $10,000, you're going to be charged $422.80 in fee. So that loan, instead of it being a $10,000 loan that's applied, it's going to be $9,577 that will be applied to the tuition bill. So there are a couple of things you could do. You could borrow the loan fee amount, or you can borrow without the loan fee and just pay the fee difference to the institution directly. The plus loan has basically the same loan for the students that are in graduate school. It's just called Graduate Plus. It's very similar. As you see here, the rates are the same. The loan fee, you have to have a credit check. The difference with the Graduate Plus loan is that the student, because it's a graduate student that's borrowing the loan on their behalf, it's going to appear on the student's credit report, and it also automatically gives the student that 6-month grace period. For the Parent Plus loan, you don't get that automatically, that grace period, but you can contact them and say that you want it. The benefit of the grace period is that no payment is due during that time period. The negative is that because no payment is due, that means that sometimes we borrow sometimes a little bit more, or that interest will be accruing, so that can capitalize and cost more towards that life of the loan. Even if that grace period is available, if you're able to make payments, that could be an option, just to help save you paying interest at the end, especially before it capitalizes, which is when that total interest that has been accumulated gets added on top of the loan. And then you have to pay a higher amount because the new loan balance is that interest plus that original loan balance. With the with the Parent Plus loan, If you apply for that loan and you get denied as a parent, you have a couple of options. There are credit checks that are required. So if you don't have favorable credit as determined by the federal government, you could appeal it. Sometimes you can appeal, and let's say that there's something on your credit report that you've been fighting and you explain it to them. Sometimes, especially if you have the documentation, that might be enough. Or you can apply with a cosigner. A cosigner is someone who is an endorser. That means that they also will be on that loan with you, with that parent for that student. So that's something to be mindful. With either option, something that's relatively newer is that if you are denied an appeal or apply with a cosigner, could take about 20 to 30 minutes depending on your pace, but there is an online plus credit counseling course that you have to take. But again, it could be as quick as 20 minutes, it could be a little bit longer, it sort of depends. You can learn more about these loan programs that I've gone over at studentaid.gov. Again, that's studentaid.gov, and this is the federal student aid website. This is going to be the same website that the student complete the FAFSA, and that's for regardless of if the student is a graduate or undergraduate student. Also, the credit report is one of the pieces that I recommend is pulling the credit report. You can go to annualcreditreport.com. Even though it's a .com, this is where we recommend that you go to that you go to look for your credit report, because it's the only source that is authorized by law to, and actually mandated to, it's to say really mandated by law, to provide you your free credit report. So you have 3 credit reports: Experian, TransUnion, and Equifax. You can go once a year to Annual Credit Report and get your credit report for free. The benefit of doing that is that then before you apply for to pay the tuition bill with the loan, you'll know where your credit stands, and you won't be surprised if something comes back and your credit report has maybe something that is an error or something that could cause you to be denied. Unfortunately, sometimes we may wait until the end of we may cut it close to apply and then find out that we're denied. So it's always better to get that information ahead of time. Now, in addition to the federal student loan and the private student loans, there are other ways that you can pay for education, but I'm calling these non-educational loans. These non-educational loans are usually not as tax beneficial. What I mean by this is if you borrow either a federal student loan or a private student loan, that the interest that is accumulated, or the interest that you repay, I should say, depending on your modified adjusted gross income, you can deduct about $2,000 up to $2,500 in interest, and help reduce your taxable liability. If that loan is a federal student loan, or if that loan is a private student loan, it has to be a student loan for it to qualify. If you borrow a non-educational loan, so let's say I borrow a personal loan or I borrow a home equity loan, I cannot use the student loan interest rate reduction, student loan interest rate deduction credit on my taxes because it's not a student loan. So that's one thing to consider. I've heard people say, oh, well, I'm going to pay with the credit card and then I'll get the points. That could be an option, but typically with the credit card, that has to be due in full in a month. And if you don't pay it, you're going to be paying a significantly higher interest rate. Typically, especially right now, you're looking at around 20% or high teens for that credit card payment. So that could end up being a very costly student a very costly student tuition payment, versus sometimes with the student loans, you have up to sometimes 30 years to repay. So you have more time and the interest rates are significantly lower than credit cards. Also knowing what are the fees. So the fees piece, depending on, I've heard some people sometimes will take money out of their retirement account to pay for a tuition bill. One of the negative implications of that could be that you now have a high tax bill because those funds were withdrawn early. So there may be a penalty fee. In addition, that income that you took out, or that those retirement funds that you took out, could now be it's now considered income, so that can increase your taxable liability. So you want to be mindful of all these other non-educational loan options, because they typically could have either a tax implication, a fee, a penalty fee if you withdraw too early. And then the other two pieces are really important. It's thinking not just about the tuition bill that's due this fall semester, but thinking about the course of when those tuition bills are going to be due, and also thinking about, well, what's going to be the impact if I need funds for an emergency? What other options will I have available to me? Another option will be, what is the impact on retirement age? So this is important for parents of students if you're going to be borrowing on behalf of the student. Well, if you borrow 100,000, 50,000, whatever amount, how will that defer your retirement? What impact will that have on your quality of life? Other things to consider, loan factors. Typically, most lenders will not have prepayment penalties, so you want to always check, will they have prepayment penalties? Is it a interest rate that is adjustable, or is it a fixed loan? What fees are associated? A lot of lenders will offer discounts if you sign up for automatic loan repayments, so monthly payments. So that's something that I encourage people to look into. It may not seem like a lot, a quarter of a percentage, but those fees add up. And then I know we have a couple of questions, and I know Wendy's on, so I think she'll be able to answer a little and speak a little bit more to the benefits at Boston Children's for education. But if you have any additional questions, please take the moment now to submit them, because we'll be answering those shortly. But the loan timeline, I talked a little bit about this earlier, but just, if that tuition bill is due in August, you want to give yourself time. The process itself is that even though that you'll get a fall tuition bill, you can apply, and this is the same for graduate programs or undergraduate, you can apply for a loan for the full academic year. And that loan, you're not going to be paying interest until after the funds are dispersed. So that's when the interest accumulates. You don't have to worry about it accumulating for the full amount now. It's based off of when the school receives the funds for that given semester. But typically, once you apply for the loan, I recommend applying honestly now. Earlier is always better. Once you're approved, it's not just as easy as, okay, you're approved. There are usually some additional documents that the student needs to complete, or the parent, whoever the borrower is. The school will be notified of the amount and that the loan has been approved. Then the funds are sent to that school at a later date. And that's usually set by the school or the lender. So for a traditional educational loan, you don't really have to do much. You apply. Once you apply, the school communicates, or the lender communicates with the school. So most of that is taken care for on your behalf. Non-educational loans, the funds are typically sent to the borrower, and you are responsible to sending that to those funds to the school. But again, if you're going to go with a non-educational loan option, I suggest really talking to someone and making sure that it makes sense for your specific financial situation, because the non-educational loans just don't have as many benefits associated with them. There are so many other different benefits of using educational loans to pay for your education. You have, as I mentioned, the student loan interest deduction, which you can read more about. And I know it never sounds fun to go onto the IRS website, but I guarantee you this is a very useful publication. It's the tax benefit. It's publication 970. It goes through all of the different tax benefits for education. So especially for graduate students or students that are going back, full-time employees that are going back, you may be eligible for the American Opportunity Credit, or there's also a lifetime learning credit. So there are all these different benefits that can help reduce your taxable liability. And there's much more information on the the 970. But in addition, if you want to read it, you can usually find a couple of blogs. We have many on our website that will go into these, but we're all getting the information from the IRS website. So I always like to direct you straight to the source. We also do have some educational loans at the credit union, so you're more than welcome to learn more. And we actually are having a presentation next week with our educational lending team, and they'll be talking more about our products and just doing an info session. So you're welcome to attend that. And that's at You can attend those by going to the financial scoop, and I'll put that link. Actually, it's up here on the screen, but I'll also put it in the chat shortly. But that's hbcu.org/financial-scoop. And our educational loan session is next week at 1 p.m. And that's just a 30-minute overview that you can ask our educational lending team specifics on educational loans. But I'm going to now turn it over to you, Wendy. I know we had a couple questions, and then I'll talk about Green Path. But if you're able to, Wendy, maybe just address some of the questions that have come in. I know that there were a couple about the tuition reimbursement program and other benefits available to Boston Children employees.
Yes. Thank you, Migdalia. Thank you for that great presentation. I always learn something with you guys here. Hi, I am Wendy Mateo Arias, Senior Workforce Development Specialist for Workforce Development Program in the Human Resources Department here at Children's. So I collaborate with benefits on this partnership to help just the support on the advertisement and, trying to reach to those our employees that still are learning that we have this benefit now. So the benefit has implemented this initiative about more than a year ago called the Wellbeing Program. And this has two focus. One of them is the health and the other one is the financial well-being. And of course, that is why we have Harvard University, the Employee Credit Union, as one of our partners to this initiative. And we are so happy to have them. So between Migdalia and I, we have put together a number of webinars that have many different focuses with one goal, the financial area. So we have, with this one today, about 11 webinars that we have provided for over a year. And for this year, we started doing them every other month. So I am going to put the link for our Boston Children's and the Credit Union page on the chat so that you guys can check it out. We have 2 more webinars coming up in October and December, and you can also see the past topics that we have covered and see the presentation and read it. You can share with your family members, your colleagues, so that they can also learn, and then they can get in contact with us if they need any additional support or guidance on these. And one little piece that I wanted to cover, so I have answered some of the questions that were there. So for the education support, Boston Children's, we have about 5 scholarships in the hospital. I manage one of them, the Sevilla or Young Scholarship, which is meant to cover some certificate and college degrees that are into the healthcare related fields or education. I can share all that information after in an email, and the rest of the scholarship are managed by the nursing and patient care operations area. We also have some college partnerships that I also work with. So right now we have about 11 college and universities partners, which provide from a 10 to a 25% discount on many of their degree programs. And lastly, for the financial piece, our tuition reimbursement is $5,250 for full-time employees and half of that for part-time employees. So as Migdalia mentioned earlier, you can take some single courses that are college credit eligible and put that towards your tuition reimbursement. We use Bright Horizons ERISES as the party that manages our tuition reimbursement, and they also have a partnership with over 200 colleges and universities from all over the country that you could, take advantage of. And many of them have the option that they provide a discount to immediate family members. So I highly recommend that. So I know that I have just mentioned a bunch of things. Maybe you were familiar or maybe not, but I am going to send all of the links to of what I mentioned so that you can learn about that. And if you have any questions, you can send me an email and we can chat about all of that. So my thing focus on the education piece and career development for the hospital. So if you are, going that way, you should send me an email. So we'll send a follow-up. And I know somebody asked, when will the recording be available? Once Migdalia has it available, she will be sending an email to everyone to review it, and you guys can connect with her team if you have any questions. Thank you very much for joining us. I hope that this was a great webinar for you. And I know I just saw a question that popped here. What if you're working more than 20 hours? So I added the link for our tuition reimbursement page. You do need to be connected to the Children's Network to be able to see it. And there you will be able to review the policy for the tuition reimbursement, and if you're a per diem, what does it covers or what it could cover depending on your situation. You can also call the HR service center and ask some of the questions that you might have after you read that, and they will be able to help. So thank you. So I'll be here, Migdalia. Thank you again for the presentation.
Thank you so much, Wendy. And thank you everyone for your questions. I think it always is helpful when you submit questions, because I'm sure if you have a question, somebody else also has it. So thank you so much for submitting those questions. We most likely will be able to get the webinar recording out probably by the end of the week, hopefully sooner, maybe be able to do it tomorrow. For anyone that's ever uploaded a video to YouTube, it just takes a while. So as long as we're able, it sort of just depends on how quickly how quickly the internet is working for us and how quickly we can upload it. But we will definitely get that to you in the next day or so. Thank you everyone for joining us. Thank you so much, Wendy, for all that additional information that you provided. Wendy did put the link, and I put it as well, for the partnership page and future webinars, which is hbcu.org/workshops/Boston-Children's. And we hope we'll see you at a future presentation, and hope you all have a wonderful rest of your afternoon. Thank you for joining us today.